Good afternoon, good morning, and good evening. Ladies and gentlemen, I welcome you all to the second day of the virtual panel series of UNCITRAL Tax and COVID-19 Response and Recovery. Today, we will be discussing about digital economy and trade finance. I'm very pleased to inform you that we have received 1,795 responses from stakeholders and interested parties from all over the world covering different geographical regions. Among the registered participants, approximately 52% are female. I have been informed that this figure is still going up as we speak. Registration is now closed for day 1 and day 2, but is still open for other days, which will be closed 2 working days prior to each session. For today's session, we have 1,071 registered participants. With no more dilation, I would start the very interesting presentation that we have today. And I will give now the floor to Madam Secretary Anju Brett. And please.
Thank you, Chair. Welcome to this second day. As you can see, although this is a virtual webinar, we are back in our conference room and we have now the necessary space to allow us to keep the social distances. Yesterday's session on digital identity and electronic signature has gathered a huge number of participants. Because we had a few technical glitches at the beginning, we could not get to a question and answer session, but we hope to be able to give you the floor today. And in any event, the questions we received on the platform have been shared with our panelists of day 1, and we will make sure that you get them. Today, we're turning to a core area of international trade and of international trade law. This core area of international trade has been very negatively impacted by COVID-19. The fact that we all work from home or have been working from home has had an unprecedented impact on the ability, for instance, of banks to process trade documents for finance transactions. Many countries continue to rely on paper documents to process documentary credits, for example, and there are still legal restrictions to the use of electronic trade documents. This is an area where immediate steps can be taken to enable the necessary transition to paperless trading. UNCITRAL has a comprehensive framework to help countries mitigate the impact of COVID-19 on international trade finance and logistics. We've done significant work in both fields, preparing texts on transport and security interests law that take into account the opportunities offered by electronic communications. The benefits arising from the adoption and use of the model law on electronically transferable records and are directly relevant for COVID-19 control include reduced human interaction, better control of the logistics chain, easier access to finance, including for MSMEs, or I would say most importantly for MSMEs, and improved governance that mitigates fraud risk. We will hear today about the challenges faced by business due to the pandemic and the opportunities that those challenges may provide. Special attention will be given to aspects that have been identified as particularly relevant or promising, such as the support to MSMEs and the use of distributed ledger technology. I'm very glad for the partnering by the International Chamber of Commerce that is partnering with us for this webinar. The ICC has very early on in the COVID-19 crisis called for urgent measures to mitigate the effect of the pandemic and to support economic recovery, among them the prompt and widespread adoption of UNCITRAL Model Law on Electronic Transferable Records as an enabler of more efficient trade financing and logistics management. It gives me therefore great pleasure to greet and thank John Denton, the Secretary General of the ICC, to join us virtually and to allow his message to be now made available to all of you. Thank you very much, John, for your support. Thank you to the colleagues from the ICC. And without further ado, John Denton's message. Thank you very much.
Friends, I'm delighted to say a few words to open this virtual panel discussion on the digital economy and trade finance, as part of an important series that UNCITRAL is running called UNCITRAL Techs and COVID-19 Response and Recovery. UNCITRAL plays an indispensable role in furthering the progressive harmonisation and modernisation of the law of international trade in these challenging times. Frankly, that role is more important than ever. While it keeps a relatively low profile in the finance community, if you're an SME, there's nothing you think more about than trade finance. Trade finance is essential to the real economy, and the real economy is critical if you want a functioning global economy. You've got to get them both functioning. The reality is that trade finance underpins approximately 80% of world trade, yet this systemically important sector is still reliant on paper-based methods, ill-suited to the 21st century and disastrous in the era of COVID-19 with its contactless nature. At ICC, we recognise the long-standing imperative and renewed urgency of moving the global trading world from paper to digital. And it's why we're housing in our Singapore hub an initiative to develop global standards to enable the interoperability in digital trade. We call it the Digital Standards Initiative. And that's why we are developing our own technological solution to help enable paperless trading as well, which is the ICC TradeFlow project. ICC TradeFlow is most critical. It is why we are strong supporters of UNCITRAL and its work on e-commerce, particularly the model law on electronic transferable records. We thank you for your work. We thank you for your diligence in pulling that together. And we thank you for attending this discussion and for championing the digitalization of trade finance.
So many thanks to John Denton, the Secretary General of the International Chamber of Commerce, for his intervention. My name is Luca Castellani. I am a legal officer at the UNCITRAL Secretariat, and I will moderate the session today. And it is my pleasure to give the floor to our first panelist, Emmanuel Gann. Emmanuel is a senior analyst in the Economic Research and Statistics Division of the World Trade Organization. She's famous for her work on blockchain, but she's also leading the work of the WTO on micro, small, and medium-sized enterprises. And many of you have come across the citation, if I've not read the full book, Can Blockchain Revolutionize International Trade? Now, I have to say, I'm not getting any royalty from Emmanuel for advertising that book, which is famous in its own right, simply because you can download it for free from the WTO website like I did. So I do recommend that you take a look at that book, that is really the reference book for. Emmanuel, vous avez la parole. Merci.
Merci beaucoup, Luca. Thank you very much. A great honor to be here today to share my thoughts on the current crisis and the impact it has on international trade and trade finance in particular, and say a few words on SMEs and DLT and what can be done by UNCITRAL and the very useful work that has been done by UNCITRAL. Now, this year is very special. It's very special for all of us, and it's very special for international trade as well. A virus has hit the world and has hit international trade in an unprecedented way. If we look at the numbers, we issued some recent trade forecasts, and we see that world trade has fell very sharply in the first half of this year. Our forecast set out two scenarios, an optimistic one, where world trade would fall by 13% this year, and a more pessimistic one, where it would fall by 32%, which is a huge drop. Right now, the data we have for the second quarter of the year seem to indicate that we'll probably not reach the pessimistic scenario, but we'll be in between the optimistic scenario and the pessimistic scenario, so in between minus 13% and 32%. And looking ahead to next year, here again, it's still very uncertain how things are going to play out, depending on how long the crisis is going to last and how big of an economic impact it will have on the economies as a whole and on world trade in particular. So we laid out same thing, two scenarios, an optimistic one, where world trade would go back to pre-pandemic trends, go back to the yellow dotted line, which would assume a trade growth of 20%, which is very optimistic, and a more pessimistic one, where world trade would grow by 5% and would therefore remain under pre-pandemic trends. Now, the lockdown has caused major supply chain disruptions. China, the largest manufacturer, had to closed down for a few weeks, was unable to produce for a few weeks, which has trickled down the chain. You had a number of countries, India, for example, that could not produce essential medicines because they could not source active ingredients from China. But even when it was possible to produce, another problem that it actually got very difficult during the crisis to move the goods. And this is what you can see here. Commercial flights were down by almost 75% between January and April. There's now a slight upward trend, but this has had a major impact and very dire consequences in some industries, like in Kenya, for example, with the flower industry, which are time-sensitive products and are usually transported by plane. Now, 40% of freight is actually transported in commercial flights. So if there are no flights, this can be a major issue for certain producers. When you look at container port throughput, same thing, it went down quite significantly in the first half of this year, even though it seems to be going up again slightly over the past few months. So let's hope that we're on an upward trend, medium term and long term. But of course, 80% of international trade is transported by commercial shipping. So a drop in the number of containers being shipped around the world has a major impact on international trade. So it's no surprise in this context that export orders have collapsed during the first half of this year. And you can see the huge collapse on the right-hand side of the chart, a very big drop, even though it seems to be going up again. Now, this big impact of the crisis on international trade has hit MSMEs very, very badly. MSMEs are actually at the center of the crisis. Why? Well, for once, they represent 95% of companies worldwide. They account for 60% of employment, but they also have a much more limited liquidity, limited financial resources, and borrowing capacity. There are a number of surveys and studies that have been conducted over the past few months that show that at a minimum, 50 to 60% of SMEs are severely affected. And you even have some surveys like one done by a university in China that surveyed about 1,000 SMEs that showed that up to almost 90% of SMEs are really at risk, cannot survive more than three months. So very big impact on SMEs. Why? As I said, because of their limited financial resources and borrowing capacity, but also because of their disproportionate presence in the sectors that have been most affected by social distancing measures and transport disruptions, like accommodation, food services, cultural, creative sectors, and wholesale and retail sectors. And they've also been particularly affected by measures, export restrictions on agricultural products in particular. I didn't put any number here, but we've been tracking them at the WTO, and the number of measures, export restrictions, has been relatively high, essentially on these famous PPE products, personal protection equipment products, but also on agricultural products. We have more than 85 members who have taken export restrictive measures. Now, the smallest companies and the youngest workers are hit the most. And one particularly concerning aspect is the fact that trade finance, which was already difficult for MSMEs, is becoming even more difficult for them to secure. Now, you may have heard about the famous 1.5 trillion trade finance gap, which primarily affects MSMEs. The first indications we have is that this trade finance gap is actually increasing, that shortages are more frequent and are really increasing. And demand for trade finance from multilateral development banks, for example, is running at historically high rates, booking some 60 to 70% of their working capital. So we recently issued, or DG recently issued a joint statement with 7 heads of multilateral development banks to draw the attention of the international community to this issue, which is of great importance. As John Denton was saying, about 80% of international trade is underpinned by trade finance. And this is a very low risk form of finance, but as a matter of fact, there is a big trade finance gap, and the current crisis is just going probably to make this gap more important. Now, the COVID-19 crisis, I think, is giving us there's some lessons that can be drawn from there. First, what is very clear is that tracking has become is vital. The crisis has exposed supply chain inefficiencies when it comes to the sourcing of key products like ventilators or personal protective equipments, and so underscores the needs for governments and businesses to improve the integrity and provenance of products. You may have heard about some counterfeit scandals. The US authorities, for example, seized more than 18 million counterfeit masks and COVID-19 related products. This is one area where blockchain there was some reference to blockchain and DLT, can actually be useful because it provides an open, tamper-proof distributed record of transactions and can increase transparency along the supply chain. Now, what the current crisis has also shown is the need for more agile supply chains and trusted supplier schemes. Because another problem that the current crisis has revealed when it comes to international trade is the fact that supply chains were not as agile as they should be, and this created a number of supply shortages of protective masks and ventilators, for example. Now, a number of companies have actually adjusted their production lines to make masks and other needed medical supplies, but the problem is that hospitals and health organizations do not necessarily know that these manufacturers are now producing goods that they need. So working on trusted supplier schemes, but also using blockchain can be interesting. There have been some projects being developed to develop connecting platforms and decentralized marketplaces to ensure more agile supply chains. But what I would like to really put the emphasis on is the question of digitalization. What the current crisis has shown is that digitalization is no option. Digitalization is a must. Trade digitalization is a must, and we need to accelerate efforts towards that. Why? Because trade remains still very much dependent on paper. It's paper intensive. There are 4 billion paper documents being generated because of trade activities every year. If you want to ship a container from Mombasa to Rotterdam, it generates a piece of paper that is 25 centimeters high. Very paper intensive, a huge waste. Many documents required, 10 to 20 documents on average for a trade finance transaction. And you can see here on this chart the number of documents, actors involved, and the complexity of interactions. What this particular study showed as well, from which that graph is taken, is that a letter of credit transaction can lead to about 5,000 data interactions, but only 1% of these data interaction actually creates value. Only 1%, and the rest is just ignore, transmit to the next party. So there are a lot of inefficiencies out there, and there's a lot that could be rationalized and that could be done in order to remove these inefficiencies and help make trade work better. Now, where do we stand in terms of digitalization? This is not a new topic. There have been quite a few initiatives taken over the years to try and digitalize trade documents. Companies like SDocs or Bolero, for example, are quite well known in that space. But I would say the uptake has been somewhat limited until fairly recently, and until really companies started looking at somewhat new technology, even though it's not that new anymore, which is blockchain or distributed ledger technology. And since over the past few years, there have been a number of initiatives that have emerged to try and leverage the potential of this technology to digitalize trade transactions. I've tried to map with a colleague from Trade Finance Global the different projects out there to get a better sense of what the ecosystem was when it comes to trade finance, but also transportation and logistics, and the different projects that relate more to trade digitalization or digitalization of trade documents per se. As you can see in light blue, there are quite a few projects that concern trade finance per se. Some of them are more relate more to open account transactions, like WeDocTrade, for example, or Marco Polo. Others focus on letters of credit, like Contour, that used to be the ex-Voltron. Comgo has both, a bit of letter of credit, open account. It offers different products. And there are some of these projects, like WeDocTrade, for example, which focus specifically on SMEs because they realize that they face a particular problem when it comes to trade finance. There are also quite a few projects that look into the use of the technology for trade documents, and SDocs and Bolero are also looking into blockchain, but you have others like Wave or CargoX, for example. And when it comes to transportation and logistics, the well-known ones are TradeLens and GSVM. So a number of projects have emerged to try and see how this very unique technology can be leveraged to truly digitalize trade transactions. And why is that technology so interesting? Because it allows all actors to interact on a peer-to-peer basis directly in real time, and it avoids the famous double spending problem. And I will come back to it later on. Now, as you can see, there are many platforms out there. Not all of them are at the same level of maturity. And if you look at the bottom side, the bottom of the slide on the right-hand side, you will see that we try to assess the level of maturity of these different platforms, and we came up with a number of 2.5 on a scale of 5, meaning that most projects on average were between the pilot phase and entering into production. Some like Congo are very advanced, others are still at the pilot phase. But what does it mean for trade? And what does it mean for trade finance? We have a great technology, yes, that can remove frictions, it can break silos, but as you can see, there are quite a few projects out there. So we have a digital island problem. And as long as we don't solve this digital island problem, we won't be able to really reap the benefits of trade digitalization. So what do we need to do? We need to work on interoperability. Now, interoperability is a catch-all term. There are many different aspects of interoperability, and we could spend hours talking about it, so I'll try to go fast, and spend more time on the legal and regulatory aspects, because I believe that's what's of interest to you. But very rapidly, interoperability at the technical level, the different platforms that I've shown work with different technologies, and they do not interoperate at a technical level because the consensus mechanism, for example, of a particular platform is not the same as another one. But even if when there are the same consensus mechanisms, there can be issues to synchronize data because of the way the data is stored and who participates in the consensus mechanism. There are different languages for smart contracts, different ways to authenticate and authorize transactions. There's also an issue of interoperability at the business level in terms of data standardization. We need to speak the same language, so we need to agree on semantics. We need to agree on data models. There's already a lot of work being done in that area by different entities, different groups, but more needs to be done, in particular to connect the dots between these different initiatives. And I believe this is what the ICCDSI that John Denton mentioned wants to do. Second, So, well, let me go back to the beginning of that slide.
The interoperability. Apologies to you and to our audience.
No problem. So I was saying we have this digital island problem. So one thing that we need very badly to make it happen and to allow true digitalization of trade is interoperability. But as I was saying, it's a catch-all term, and interoperability has many different facets. First, there's the technical interoperability at the platform level. These different projects that you saw on the previous slide rely on different technologies. So there are different consensus mechanisms that are being used that make it complex for this platform to interoperate. And even if they use the same consensus mechanism, there may be issues to synchronize data because of how the data is stored, for example, and who participate in the consensus mechanism. Different languages for smart contracts, different ways of authenticating and authorizing users and participants. So these are technical issues. There's a lot of work being done on these different aspects by the tech community, a lot of attention to try and solve these interoperability issues. Now, there's also, when it comes to interoperability, the issue of data standardization, because if you want to be able to exchange data, you need to speak the same language. Is the port of discharge the same thing as the port of unlading, for example? So the importance of semantics and data models is critical. Here again, there's quite a lot of work being done on these issues of data standardizations and data models by different entities. Now, what is critical is that we connect the dots and that we ensure that we have a coherent approach for international trade as such, and not only focus on, for example, the bill of lading or the invoice, but that we connect the dots. And I believe this is what the ICCDSI that John Denton mentioned aims to do, and this would be a very welcome development. Interoperability is also critical at the governance/commercial level. When we talk about trade finance, a key aspect is the KYC, right? Now, you want to make sure that there's the same level of scrutiny, that the processes are aligned, so that a bank is not going to enlist a blacklisted company and then another bank on the platform would provide finance to that company. So you need to agree on those terms. Likewise, if the first bank spent 2-3 hours conducting KYC, and a second bank benefits from this, there should be some commercial compensation or some commercial agreement as to how to deal with this. But one aspect that, in my view, should be emphasized more is the legal regulatory dimension of interoperability. And I believe this is also what is of great interest to you at UNCITRAL, where you have already been doing a lot of work. And in my view, this aspect is critical. There's a lot of work being done on the technical interoperability level, but we need to pay more attention to legal and regulatory interoperability issues. What do I mean by that? First, recognition and acceptance of e-signatures and e-documents. You can have a great technology to digitalize trade. If your legislation does not recognize e-signatures and e-documents, it won't really help. And as a matter of fact, there are still some countries that do not recognize e-signatures and e-documents. Now, UNCITRAL has been doing some great work in that respect, has developed very useful model laws, model on electronic signature, of course, but also the model laws on e-commerce, on electronic communications in international contracts that include the principle of functional equivalence. And I think these model laws are really critical. Now, what is important is for the national legislators to understand that it's critical for them to transpose these model laws, because recognition and acceptance of e-signatures and e-documents are a precondition to trade digitalization. Second, digitalization of documents of title. A critical document in international trade is the famous bill of lading, which is a document that proves ownership and that can be used as a collateral for financing. Now, this is a big problem if you can just make copies of that document, and there have been some scandals in that respect. So what is very important is to avoid this double spending problem that I mentioned a little bit earlier. And this is where the famous MLETR that you mentioned in the introduction is critical, because it's an answer to this double spending problem. So the MLETR is key for paperless trade implementation. It really lies at the core of trade digitalization. And I think here again, we all need to better inform regulators and make them aware of the importance of this instrument and of transposing this instrument into the national legislation, so that we can really move forward in terms of trade digitalization and help build that enabling regulatory environment that is badly needed if we really want to digitalize trade. So what do we need to achieve all this? We need a global coordination. We need global coordination to avoid regulatory fragmentation. We need global coordination to enable that regulatory framework, that enabling regulatory framework to be developed in a coordinated manner. I just would like to finish with a quote that I like very much and that I use in some of my presentations. So some of you may have already heard it, but I think it's very relevant in the case of blockchain and trade digitalization, which is, if perhaps here, yes, a quote by Henry Ford: "Coming together is the beginning, keeping together is progress, working together is success." And I think that we really need to all work together on trade digitalization to make it happen. Thank you very much for your attention. And so,
oh, thank you so much, Emmanuel. We apologize for the glitch. Very interesting presentation. Many takeaways. I think we were really taken away by all the figures that you gave us on the actual disruption that the COVID had. We took good notes of the interoperability issues. We took a good note of the data standardization, data modeling issues. And of course, personally, I totally agree with this new vision. We don't focus on any specific document, existing document, but we see we have a holistic approach. Now, our next speaker is Mr. Shantanu Godbole, who leads the Future of Climate and Supply Chain Department at the IBM Research in India, where he focuses on building innovative technology solutions for helping enterprises erase supply chains with climate resiliency and carbon accountability. I have met Shantanu when he was working actually at the IBM Center for Blockchain Innovation in Singapore, and dealing again with trade and finance issues. Is very innovative in using AI and blockchain in finding these solutions to such problems. Now, I saw Shantanu online before, and I trust that he's online now. Shantanu, if you're there, you have the floor.
Thank you, Luca. Can you hear me?
I can hear you. I can see you from afar.
Perfect. Thanks. Thanks, Luca. So good morning, good afternoon, and good evening, everyone. I am very pleased to be invited here and share this panel with my esteemed co-panelists. As Luca kindly introduced, I am Shantanu Godbole, and I work for IBM Research out of Bangalore, India. And while I have worked in the domains of blockchain and trade and finance, today, as per my discussion with Luca and others, I will restrict my remarks to share my observations and perspectives based on the topic today from the technology side of things as relates to the work that we do with enterprises in the space of supply chains, trade, and sustainability, not specifically touching on blockchain as a technology, but more in terms of what we are seeing with the COVID crisis and what enterprises are thinking about and worrying about, more a private sector view, and what relevance it has potentially to the legal side of the house. So COVID-19 has obviously taught the entire world the meaning of phrases like flatten the curve, supply chain disruption, building resiliency, etc. And a few weeks into the various countrywide lockdowns that we have seen over the last few months, we have all seen stories about first toilet paper, then sanitizers, then baking products, then electronic gaming equipment, and finally personal grooming products flying off the shelves of retailers and e-commerce providers all over the world. Obviously, these products most likely crossed the country boundary before they came onto these shelves. And all of this was induced by the initial reactions of people as they understood what this crisis, this disease is all about in terms of stocking up on essentials, understanding the need for hygiene, then turning to stress-busting activities, maybe like baking, given that free time was abundant as lockdowns went from days to weeks and even months in some cases. And finally, people got bored, turned to gaming, and finally realized that, personal care, hair care, grooming were important because of these new days of video conference calls and being in calls all day, etc. So the unprecedented scale and durations of some of these lockdowns have posed serious new technical challenges to supply chains in terms of being able to model and react to the demand changes and surges that have not hitherto been seen before in recent times, even in recent decades. So enterprises like retailers and distributors that we largely work with, among others also in the logistics sector, have struggled to keep up with these spikes in orders amidst restrictions in movements of goods, people, and the confusion around classification of what constitutes essential goods and services. Now, given that 4/5 of the world eats some or the other food product that has crossed a boundary in their making from farm to fork, it is both a wonder as well as an area of concern that supply chains have largely held up and provided for people because of the essential classification of food, but also a cause for worry for the long-term sustainability of these in case the current crisis extends and causes countries to react and close borders to goods and services as they have to people by restricting travel and things like that. Now, end-to-end visibility of inventories and stock levels, disruptions in supply routes, alternative sources for raw materials, and the surge nature of demand in certain kinds of products at different points in times has led to a high degree of interest in these new class of solutions called control tower solutions, which are essentially dashboards that provide an intelligent overview of the state of an enterprise's supply chain, right, all the way upstream and downstream, and all the elements in it that require attention and resolution. And many technology providers are coming up with these kind of tools and applications. Now, these issues range from specific consignments being stuck due to logistics dysfunctions to stock levels in inventories that need monitoring and that may prompt transfer between warehouses or inter-distribution center transfers, etc. Now, these technical problems are well known from an optimization perspective, but the solutions are hard to come by because the end-to-end supply chain visibility has been a long-standing ambition of supply chain operators, made largely unattainable by the lack of trusted information sharing between entities, partners, vendors, and suppliers, especially in cross-border scenarios up and down the chain. Now, as Emmanuel very eloquently spoke before me, blockchain has emerged as a relatively newer technology that can potentially solve this information visibility and sharing problem. And if I may add my 2 cents, what has really ignited the imagination of people with blockchain is this ability to conduct business processes across organizational boundaries. So maybe more on that later in the question answer session or so. But coming back to my point, we have also come across instances of several countries of retailers suddenly rushing to go electronic in terms of trends that we are seeing out there in the real world, leading to the need for technology to enable e-commerce, like suddenly go electronic, create new physical logistics challenges that these retailers have never dealt with before traditionally. The demand for a wide variety of contactless sales solutions in retail stores, including notions of like virtual tryouts for consumers. And that is understandable, right? Given people's reluctance at human-to-human contact and, in fact, unnecessary contact with any kind of surface, if possible. So from clothing to jewelry to eyewear, this trend is becoming apparent. Further, digital contactless payments have also seen a huge rise in demand and potential, and countries that already have some underlying mechanisms and enabling environments for these have flourished from a system sense. So not flourished from an economic sense, but these systems have flourished. So a specific example, obviously, that I can give out of personal experience is India, which is probably a good case study. Because over the last few months, various wallet apps especially have been enabled because of the government initiative of creating a universal payments interface, which really has enabled digital instantaneous money transfer, which has now become ingrained across hundreds of millions of people as a standard way to buy things in your grocery shop or down the road and exchange money in a peer-to-peer sense. These money transfers are instantaneous, bank to bank, sometimes require minimal KYC, though of course undergoing a full KYC verification opens up many opportunities. I must comment that the recent lockdowns in India's case has only cemented the role of such e-payment, digital payment systems, not only in a consumer sense, consumer to consumer, consumer to business, but also business to business and in a trade, in an international organization to organization sense. The first push in India obviously occurred in a different context 4 years ago when there was a large-scale demonetization carried out, but that was for completely different reasons. But the lockdowns have really cemented the role of e-payments and digital payments in India. Now, a significant need that has come out of this digitalization of supply chains due to COVID has come about due to the above reasons. And as enterprises look to switch to alternative sources of raw materials and products, the onboarding of new suppliers and vendors digitally and quickly has become a pressing need. Think about your favorite supermarket or grocery store. They are having to source products, some of the products that I mentioned in the beginning, at short notice, at large scale, from people that they have not dealt with before. And from a business sense, this is not easy to do. So this process of onboarding vendors and suppliers usually takes weeks or months, going to data harmonization activities in spite of existing standards, say even if you go back to the EDI world, because there are always data level inconsistencies and the vagaries in which people use these standards, which takes time, right? I mean, from a practical sense. Digital identity and KYC of these new actors in your supply chain, in a trade sense, in a supply chain sense, has also gained sudden attention. And the need for nationally or internationally acceptable and government-backed mechanics of doing this onboarding will be welcome if such things exist. Now, the lockdowns and the subsequent opening up of economies, as we have recently started seeing, has led to governments and supply chain actors to focus on shortening the length of their supply chains, in some sense to regionalize to the extent possible, to reduce dependence on border crossings and the associated new delays that have come about in border crossings and the uncertainties because of things like mandatory quarantine rules for logistics personnel, etc. So while it is not yet the case that regionalization is a major observed trend, but more a possibility to watch out for if the current crisis lingers for months, and country reactions for political reasons and enterprise reactions for economic reasons forces hands. So here I will of course not address the political aspects of this. One last significant trend that we are seeing in this space is the willingness of enterprises and countries to treat the current crisis as a lesson and opportunity to take head-on some of the larger complex issues around sustainability, climate action, etc., as those are anticipated to cause further large-scale disruptions to supply chains in the coming years. This could be due to maybe other kinds of diseases, may not necessarily be pandemics, other climate-related extreme event disruptions, as we have seen when things like hurricanes strike certain countries, etc. And we have all seen comparative pictures from cities all over the world showing a before and after view that depicts drastic reduction in pollution and significant improvement in visibility due to the lockdowns. However, of course, the scientific community knows and feels that this is not long-lasting, since global warming has really caused damage across decades and centuries, but a mere weeks is not really going to reverse the patterns, but it's like a call to arms. So unlocking of these economies is thus being regarded as an opportunity to look at regulatory and governmental climate action that can be set in motion to really bring in resiliency for the long term, not only for the pandemic and the current compelling reason to act that we have at hand, but also overall. We have come across large enterprises changing suppliers owing to the current restrictions in border movements and other things that I mentioned, and choosing ones with maybe inferior practices, inferior track records, inferior sustainability practices, merely because there is no alternative in the face of the demand surges for key products that they must service for their customers. So this knee-jerk reaction hopefully will eventually change and self-correct itself. Coming back to the topic at hand, obviously on the subject of the supporting legal mechanisms for what we are seeing out there in the real world across the developed and developing world, I'm obviously not a legal expert, but we note a few things from my observations above. These include the need across countries for legal mechanisms and regulatory mechanisms that will smoothen the flow of goods and services across country borders, enable electronic payments for customers at touch points like storefronts, but also at an inter-organization cross-border supply chain level, and enable the digitization of supply chain processes like identification, onboarding, KYC, and going the e-commerce route, especially in developing countries. So with that, I will pause my remark, and I'm happy to address any questions in the later part of the session. But thank you for your attention, and back to you, Luca.
Thank you so much, Antano. And as many of us are lawyers, we are totally fascinated by the business perspective over all of this. It's a lot. I have to say there are some elements in common with, of course, with what Emmanuel said. I would like to highlight one that I forgot to highlight before, the issue of digital identity that was discussed yesterday in a dedicated panel. And we highlighted already the need to have portability of credentials, including for KYC purposes. And of course, Working Group 4 is working on a project on that. So this is something that will get a new momentum and will get a sense of urgency to finalize that work. Very interesting considerations on the environmental aspect. Of course, Shantanu, this is your field. Now it is green sustainability that you are particularly active in. Interesting also the fact that we are shortening supply chains. So we will go from global to regional and maybe to national where possible. This is something that we have to take into serious account. Payments, we will hear more about payments later, but of course payments always very important, and also micropayments and contactless payments. So a lot, I'm sure there will be many questions. I would like to say already now, we will open the chat for questions later during the last speaker intervention. So please hold your questions for another 15 minutes, and then you will have access to the chat, and you can put your questions. All the participants in the audience can put questions. Of course, those who are delegates, please identify yourself as such so that we can take first questions from states. Our next speaker is Raoul Renard, who is Manager of Government Affairs at the International Chamber of Commerce, and is actually based in New York. So we thank again the International Chamber of Commerce that is the partner of this panel. And we thank Raoul for his kind availability in the early morning to share his thought with us. Raoul, you have the floor.
Thank you very much, Luca. Can you hear me?
Very well.
Wonderful. Thank you. Can I start by commending UNCITRAL colleagues for a truly comprehensive virtual panel series, and thank you for inviting ICC to co-host this panel. I can only echo what my Secretary General John Denton said in expressing our gratitude to UNCITRAL for advancing the progressive development and harmonisation of legal frameworks that are critical to international trade and that enable businesses worldwide to transact with one another. This series is a wonderful example of the diligence and professionalism of the UNCITRAL Secretariat's work. Our next slide, please. There really is something for everyone in this series, from trade finance to gender and trade to dispute resolution, public-private partnerships. Now, some of you may know that ICC has launched a global campaign to save our SMEs, with a focus on government policies, practical tools, and support services to ensure small businesses remain afloat during this crisis. And so I, for one, am very interested in the Targeting MSMEs session next Monday. I've been struck by the caliber and breadth of speakers in this series. It is truly impressive, and I'm honoured to speak among leaders in their fields. As Lucas said, my name is Raoul Renard, and I am the Manager of Government Affairs for the International Chamber of Commerce at our permanent mission to the United Nations based in New York. To introduce ICC, we are the institutional representative of over 45 million companies in more than 100 countries. Our purpose is to enable business worldwide to secure peace, prosperity, and opportunity for all. We recently celebrated our centenary and are the only private sector organisation to have permanent observer status in the United Nations General Assembly. My remarks today will be focused squarely on the trade finance market and the pressing need for legal frameworks to enable its digitalisation. Next slide, please. Trade finance is often derided as an antiquated market. As the latest issue of The Economist stated just last weekend, trade finance has long followed outmoded practices. Indeed, this is a common refrain from The Economist. I've put up on the slide here a rather uncharitable quote from their issue last October. All this explains why an industry that is global by definition is parochial and antiquated. And well, why is that? Well, the issues are well known. The critical problem is the reliance of the industry on paper documents and the many inefficiencies that come with that. A single transaction often requires the interaction of more than 20 entities, and according to Boston Consulting Group, involves between 10 and 20 paper documents and 5,000 data field exchanges. And I was struck by how evocative the example that Emmanuel gave of 25 centimeters of documents for one transaction. But with COVID-19 restrictions and lockdowns uprooting supply chains, as Emmanuel stated, and affecting all manner of workplaces, this reliance on paper is not only a source of inefficiency, but a major liability for the industry and for traders globally. Let me make this point by way of a couple of illustrations. The next slide, please. For traders, anecdotally, the two principal issues we're hearing are increases in time and costs due to paper-based requirements during COVID-19, particularly in areas affected by lockdowns. To give one example, in April-May, instead of taking 24 hours to ship original documents from Seoul to Singapore, it was taking 3, 4, even 5 days. Now, if you think about that delay en masse globally, the impact on global trade is very significant. In terms of costs and inefficiencies, in speaking with commodities traders, in this instance, Trafigura, a very practical issue was that working from home measures meant every originator of documents in the business needed to have photocopying and printing services in their homes. So the added expense of home offices for many employees, coupled with the need to have logistics providers traveling to and from individual workers' homes with little centralization, are significant. Now, we think about the associated costs for global commodities trading houses such as Trafi, or for international banks. They're a major inconvenience, but these market participants generally can wear those costs. But thinking of MSMEs, Emmanuel has eloquently set out the problem already in terms of the availability of trade finance for MSMEs and the famous trade finance gap. We should also be mindful, though, that these added costs in terms of business continuity are also present for MSMEs, but their ability to wear those costs, particularly during COVID-19, is greatly diminished. We know, for instance, that a majority of MSMEs have only 4 to 6 weeks of free cash flow. So if we want to view international trade as a source of greater resilience for MSMEs, which I know many in the international trading community feel strongly on this issue, well, this is impeded by the fact that we still rely on paper-based methods. This brings me to my second illustration and to the question, why do we still rely so heavily on paper-based methods? An ineluctable element of that answer is that we lack the implementation of enabling legal and regulatory frameworks for paperless trade. Banks are taking a very pragmatic approach to all of this during the crisis. Where original paper documents are required by law, the parties are essentially agreeing to use the electronic documentation, PDFs, and where wet signatures are required by law, the parties are essentially agreeing to use electronic signatures. And in the absence of legal certainty, parties are falling back on ad hoc indemnities to overcome potential unenforceability issues with a failure to conduct the transaction with paper. But this is not without significant legal risk. Where national laws require the use of original documents, a failure to use them could undermine the binding legal effect of contractual obligations. So what we're seeing is that the commercial realities at play are encouraging workaround methods, but not without added cost, delays, and legal risk. Next slide, please. So what should we do? Well, ICC has two recommendations, an immediate one and a medium-term one. The first is to take emergency measures on the part of states to immediately void all existing legal impediments to the use of electronic trade documentation. The Algerian Central Bank led early on this issue, where around the beginning of the pandemic, a directive made by the bank enabled the use of electronic trade documentation in lieu of papers. We recognise that not all legal systems will be amenable to precisely the same form of intervention. Depending on the system, some will be able to take executive action, perhaps others will require parliamentary oversight and legislation. But we call on all governments to take the appropriate step to effect this change. To give you some further recent examples, in May, Oman introduced e-delivery and e-cargo release orders, enabling the logistics sector to approve digital documents. Port operator, shipping lines, and custom clearance agents will all process shipments electronically. And in a very welcome move late last month, the Central Board of Indirect Taxes and Customs of the Government of India announced that, effective immediately, exporters will no longer be required to present paper copies of let export orders and shipping bills. Now, in terms of the medium term, the second recommendation of ICC is for states to adopt and implement as quickly as possible the UNCITRAL Model Law on Electronic Transferable Records. Under the MLETR, an electronic transferable record is functionally equivalent to a transferable document or instrument if that record contains the information required to be contained in a transferable document or instrument, and that a reliable method is used to A, identify that electronic record as the electronic transferable record, to render that electronic record capable of being subject to control from its creation until it ceases to have any effect or validity, and to retain that the integrity of that electronic record. Importantly, as has been discussed, the MLETR is technologically neutral, but we tend to view distributed ledger technology as a key piece of the puzzle in terms of ensuring integrity, as Emmanuel stated. But what we need above all is for states to adopt and implement the MLETR. We've been actively promoting this through various means. For instance, we strongly recommend that the Joint Statement Initiative on Electronic Commerce, the Quadrilateral Negotiation in Geneva, include a provision mandating the adoption of the MLETR. We would also like to see references to the MLETR in any other trade agreements. So we were very encouraged to see the Digital Economic Partnership Agreement include a reference to endeavour to adopt the MLETR, or rather to have principles consistent with the MLETR. I think the bottom line, we'll innovate and we'll come up with the technological solutions to replicate the essential features of traditional trade administration documents while reducing cost, cutting time, and guaranteeing integrity. And as Emmanuel showed and Shantanu mentioned, there are already many initiatives in this area, but we need the underpinning legal certainty. And thus far, I have to say, uptake of the MLETR has been too slow. For ICC, it is an essential piece of regulatory infrastructure that will enable paperless trade at scale. Next slide, please. Now, I'm not a salesman for The Economist, I promise, but I sided with The Economist's observation last week that trade finance has long followed outmoded practices. I didn't finish the quotation, though. Having spoken in their article about industry standardization efforts, the piece ends, now might be trade finance's chance to blow everyone's socks off. In our view, that simply won't happen until states have adopted and implemented the MLETR. And with that, my deep thanks to Luca Castellani for his leadership on this issue, and thank you for listening. Thanks.
Thank you, Raul. We are deeply grateful to you and to the ICC for this presentation. And of course, it's so important for us to have the ICC endorsing the views of business behind this model law that we hope we will this model law will be broadly adopted and will follow the steps in particular of the model law on electronic commerce. Let's not forget that we have a good starting point, which is the fact that altogether, ancestral texts on electronic commerce have been already adopted by more than 100 states. So if we can live up to that, standard, I'm sure that with joint effort we'll be very successful. Of course, we have to get ready. There will be demands for technical cooperation. The Secretariat is always here to assist to the best that we can. Thank you so much, Raul. And as we transition to our fourth and last speaker, I would like to share some slightly more accurate information on the Q&A that now will be made available. So there is a Q&A function in the WebEx, and where we ask states to put their name, so the official delegates can put their name to ask for the floor. And after the fourth presentation, will be the segment for states, and we will give the floor to those states. And then the general public may also type in questions, and then to the extent possible, we will pick up the questions from the podium. We will ask the questions to our presenters today. So it's not a chat, it's a Q&A. It's a Q&A function of the WebEx. Please, if you are in the general public, type in your question, and if you're a state, type your name, and we will first give the floor to states and representatives, official delegates, and then we will take the general questions. Of course, we accept gladly also commitments to enact the MLETR in the next couple of weeks. We hope that we will come soon. Now, our last speaker is Yan Chao, who is the project lead of the digital trade team at the Center for the Fourth Industrial Revolution of the World Economic Forum, where she focuses in particular on digital payments for commercial purposes. She has extensive private sector experience in financial services, e-commerce, cross-border investments, and capital markets. I'm very happy to give the floor to her and also to mark our cooperation with the World Economic Forum. Very grateful. She's based in San Francisco. She's been patiently waiting for her time to speak. This is particularly appreciated. But I guess that by now in San Francisco, you are having the sunrise, and we will benefit from your sharing these rays of hope with us. And thank you. You have the floor, Jan.
Thank you very much, Luca. It's my great honor to give a presentation here. I'm currently based in San Francisco, and as Luca pointed out, the sunrise will arrive very soon, so hopefully we can enjoy it together. The Forum has established a Center for the Fourth Industrial Revolution in 2017 in San Francisco. The goal is to bridge the gap between the policies and also the latest technologies. So today, my topic is going to talk about the importance to modernize and to harmonize the legal ecosystem for payments. And at the comfort of my home today, I'm actually able to watch the movies made in Bollywood, play computer games designed in Japan, and also be connected with all of you through the teleconference. Most of the digital services can be delivered instantly and seamlessly. However, when it comes to payments, it's a very different story. If I want to make a wire transfer in the United States, it can take up to 3 business days to process it. If I want to send monies abroad, it can take up to 4 to 7 business days, depending on where I want to send the money to. And at the same time, some countries, they can only send payments rather than receiving payments through the international payment service providers, which means that the merchants in those countries will not be able to participate in global e-commerce in a cost-efficient manner. The fundamental nature of payment services is really to be a network to connect individuals and also to connect different digital economies across different jurisdictions. I've always been wondering why payments network cannot be a global network just like internet, which can be accessible from all over the world and also interoperable through all different applications and devices. So why are there frictions associated with payments, and how can we address those frictions from legal perspective in order to make payments as a global network? I think there are three key challenges with respect to the preventing payments from being a global network. So the first challenge is about the access. According to the World Bank, there are 1.7 billion of people over the age of 15 who don't have access to any financial services accounts. So that includes banks and also includes mobile wallets. If we look at it from a country's perspective, there's a wide varieties among countries. So for some countries, it's 0%, everyone has access. But while in some other countries, they can go up to 33%. So the first thing an individual needs to do to open up an account for the financial services is really to have a formal identification. And as my fellow panelists have pointed out, identification has been really a big problem for people to have access to financial services, to trade finance. And globally, we have 0.3 billion people who don't have access to a formal ID. And again, from a country perspective, it's the range between 0.3% to 84.3%. And when we think about digital payments really don't live in a vacuum. Digital payments needs a lot of support from the digital infrastructure. I think in the past 10 years, we have made great progress in terms of building up infrastructure. However, if we look at from the country level in terms of the access to electricity, there's a difference between 0% to 88%. If we look at the internet access, still half of the population in the world do not have the access to internet. And in the past few years, the access to mobile has really been driving the financial inclusion. Even though on average globally, there's an individual on average can have 1.06 like mobile phones, but from country levels, for some countries, it's a very high penetration, almost for one person can have 2 phones. But then in some countries, there's only a 4% of population have access to mobile phones. So what does it mean? It means that we need to build up a legal framework to support innovation and also investment in infrastructures related to the payments. And the second challenge, as Emmanuel has actually talked about, is about the interoperabilities. So there is a different legal requirements and standards from country to country when it comes to payments. So most countries have their own specific licensing requirements when it comes to payments. And from the payments perspective, typically there are 3 key risks associated with the operations. I think number 1 is about safeguarding the customer funds. And number 2 is it's about knowing your customer process and also the money laundering risk and also fraud risk. And the third one is about the data privacy. And most countries have their own specific requirements in those 3 areas. So when you think about that, for countries who want to operate on a global scale, that means that they will have tailored their products to meet different requirements every time when they enter into a new country. Based on the survey of payment service providers, high legal and compliance cost has been one of the key reasons they cannot scale globally, and also one of the key reasons why the payments fintech and startups tend to fail. And the different standards of KYC also prevents countries from being connected to the global economy. So what it means is that we really need to drive this global collaboration in harmonizing payments laws and regulations. And the third challenge we face here today is really the gap between the legal requirements and innovations. I think for a very long period in history, payments have been very much cash-based. As we move into the age of digitization, payment services have been provided by banks and other traditional financial institutions. But what we have seen in the past few years is that there are more and more new players entering into the payments market with the goal to lower the price and also with the goal to expand the access for people as part of their business expansions. Just to give a few examples, smartphone companies like Apple and Samsung have developed respective e-wallets, and e-commerce giants such as Amazon and such as Alibaba, they have their own e-wallets as well. And telecom companies such as Safaricom have launched e-wallets like M-Pesa, and even social media companies like Facebook and WeChat have also enabled wallets through their network. So what this means is that those new players, they are bringing a set of opportunities and also challenges that's different from the traditional financial institutions. And in some countries, they apply the same set of the stringent rules to the banks, to those new players, while at the same time, some countries, they don't really have a specific regulations with respect to payment services provided by non-financial institutions. And it creates a vacuum of regulations and oversight, which can result in the lack of protection of consumer rights. And also at the same time, given that there are already a lot of government agencies overseeing those new players, when they introduce payment services, and sometimes we can see the overlapping regulations. To address this issue, we really need to have more intergovernmental approach and coordinations among different agencies. And as Emmanuel pointed out earlier, there's a lack of legal infrastructure to support digital payments. And I think I'll just quickly go through some statistics. So far, there's only 60 countries that have adopted e-signature laws. And United Nations have conducted a survey which shows that about 81% of the countries adopt e-transactions laws, and 56 countries adopted online consumer protection laws. And I think it's a little over 50% of the countries adopted data privacy laws. And also over 79% of countries have laws related to cyber crimes. It's very important to have those legal infrastructure in order to support digital payments, because digital payments at the end is one type of electronic transactions. And as my fellow panelists have mentioned, right now we rely more and more on digital identification. And for the new players who are entering into the market of payments, a lot of them don't have physical locations. They rely very much on the process of electronic KYC in order to identify the identification of their consumers. And in the process, they often implement the biometric authentication in order to know who they are opening the accounts for. So it's very important for the countries to provide the legal support for the digital identification and the eKYC. However, many countries' KYC-related rules still require the verification documents in a paper format. And lastly, as Emmanuel mentioned, I think the blockchain technology has been introduced into the areas of trade finance and also in the areas of payments. And many of those blockchain technology has been supporting the development of digital currencies, from the cryptocurrencies to stable coins to central bank digital currency. However, there's very little movements in terms of the laws and regulations to provide clarities of the consequences of using digital currencies. And also there's a lack of global coordination among countries as to the governance with respect to digital currencies. I think it's very important at this stage for the countries to collaborate around the digital currencies in order to avoid the frictions we face today with respect to payments. And to bridge this gap between the legal requirements and innovation, much work is needed to modernize the legal ecosystem for payments. So right now, there's actually quite a lot of initiative have been done at the domestic level and also at international level to address the challenges I mentioned. So from a domestic perspective, many countries are already taking the initiative to modernize the payments law. Just to give a few examples, the government of China, they are really taking a lead in terms of digital payments. And China's payments-related laws explicitly allow for biometric authentication as the way of eKYC. And also the Central Bank of Papua New Guinea is working with local financial services institutions to establish a digital identity network. And at the same time, they have passed regulations to allow for regulatory sandbox for fintechs. And in terms of the intergovernmental collaborations, the government of Azerbaijan is actually providing a very good example. So for its 5-year strategy for payments, it's embracing a holistic approach in promoting digital payments, from tax legal reforms to employment law and social benefit legal reforms, and all with the goal to promote digital payments. And on the international level, there are also multiple global levels efforts led by the international organizations. I think Emmanuel has given an outline of the model laws UNCITRAL has published. And we have also been working very closely with Luca here at UNCITRAL and Asia Development Bank in Papua New Guinea to provide trainings on the draft Electronic Transactions Act, which is based on the model laws published by UNCITRAL and with the goal to promote e-commerce. And UNCITRAL has also published the legal recommendations interpretations. And both of the model laws and legal recommendations interpretations have been very helpful in harmonizing the laws and regulations across countries, while at the same time preserving flexibilities. We have recently published a paper on the policy recommendations for cross-border payments, together with my colleague here from ICC. And in our paper, we have highlighted a few initiatives at a global level and also at the regional level. We have been witnessing digital trade commitments as a way to drive global standards with respect to payments. The most recently finalized Digital Economy Partnership Agreement among the governments of Chile, New Zealand, and Singapore is a perfect example. The signing parties of Digital Economy Partnership Agreement have committed to the adoption of internationally accepted standards for digital payments and to promote data sharing between the existing financial institutions and payment service providers. And from the innovation collaborations perspective, the UK government is leading the creation of a global financial innovation network, GFIN, to provide and improve the global cross-border collaborations between the financial authorities. So far, there has been 43 financial supervisory authorities joined the initiative to share the best practice with respect to innovations in payments and fintech. And GFIN is also currently developing a common application across jurisdictions to streamline the cross-border service pilots for fintech. And the Monetary Authority of Singapore is also a leader in innovation collaborations. MAS has signed 33 fintech cooperation agreements with its fellow regulatory oversight counterparts in different jurisdictions around the world. These cooperation agreements allow for information sharings among regulatory authorities, and also it provides referrals of qualified firms to one another, and it also provides commitments to explore joint projects with respect to financial innovations. And last, I kind of want to talk about the initiatives in terms of license passporting. I think that's something that we have seen in European Union. Under the EU's financial service directives, the payment service providers are able to license. Once they are licensed in one member country, they can actually passport their license in other member countries instead of initiating a new process of getting a license. All those initiatives are really helping to drive the harmonization of legal ecosystem for payments and providing more clarifications and certainty for payment service providers who want to scale globally. In conclusion, I would like to call for actions in two aspects. And one is really for the regulators to embrace the idea of agile governance. Technology has been changing very rapidly in the past 10 years, and law and regulations are still lagging behind. It's really the time to rethink how we should modernize the approach to create laws and regulations that are both technology neutral and at the same time can withstand the test of fast innovations. And agile governance really calls for more public and private collaborations in the process of understanding the challenges and opportunities imposed by innovations. It also calls for a risk-based approach to allow the innovation to flourish in its beginning of development. And I also would like to call for more global collaboration. I think it's very important at this age of digital economy where the physical boundaries are disappearing. And I believe that UNCITRAL's model law and legislative guides and recommendations are great tools in driving global standards for payments. World Economic Forum will continue to work closely with UNCITRAL, with WTO and ICC and many other international organizations to drive for modernization and harmonization of ecosystems for the future of payments. Thank you very much. I will pass the floor back to Luca.
Thank you so much, Jan. That was really informative. And I am very aware of having some time constraints here. I just wanted to thank you, to say again, I saw again important elements of digital identity, KYC coming back yesterday and today. I saw also back on the UNCITRAL radar screen payments, which is a field where UNCITRAL has worked in the last time in the early 90s. So there was quite a bit of time, but digital currencies, of course, sounds very exciting, very sexy. So we have to look into this. And with this, we conclude the part on the presentations. And we have the segment on the intervention of states. And for that, I will pass on the floor to the chairman of UNCITRAL.
Thank you very much. And first, I would like to thank to each panelist for their interesting presentations. So I would like now to open the floor for state interventions. I have on my list that Singapore has asked for the floor. So please, I will give the floor to the distinguished representative of Singapore.
Good afternoon to the chair and one and all. You be able to hear me?
Yes, we can hear you.
Thank you. Just first, we'd like to thank UNCITRAL for organizing today's panel and also all the speakers for the very informative and very timely presentations on a topic of great interest. In Singapore's, from Singapore's perspective, the UNCITRAL Model Law on Electronic Transferable Records is a commendable legislative model to enable the creation and use of electronic transferable records in international trade. And many of the speakers have already mentioned bill of lading as one of the very important documents in international trade. As a harmonized law prepared by UNCITRAL after having taken into consideration perspectives of various legal traditions of member states and industry input, the model law is an international standard that has the potential to promote cross-border use of electronic transferable records, such as the electronic bill of lading, especially because it is facilitative and does not affect or require implementing states to amend their existing substantive law on transferable documents or instruments, including the Bill of Lading. Singapore has conducted domestic consultations on the question of enacting this model law in our domestic law, and industry responses have been supportive. Singapore has also promoted and shared the benefits of this model law with other countries when opportunities arose. In the Digital Economy Partnership Agreement signed by Chile, New Zealand, and Singapore last month, which was mentioned by the earlier speaker, the parties agreed to endeavor to adopt the model law on electronic transferable records in our respective domestic legal frameworks governing electronic transactions. Whilst the benefits of using electronic transferable records, which led to the preparation of this model law, remain valid today, I think the COVID-19 pandemic, which has forced businesses and people to adopt more digital ways of transacting, has added an additional dimension to the benefits of digitalization and perhaps impress on all of us the urgency of doing so. Thank you. Thank you, Chair.
Thank you for your comments. I will give now the floor to the distinguished representative of China. China, please, you have the floor. I think we are having some technical problems with the representative of China. In the meantime, so we are going to give the floor to the distinguished representative of Russia.
Thank you very much. Can you hear me?
Yes, we can hear you. Please go ahead.
We would like to thank all the panelists, and all presentations are very informative about current problems, but we think that the number of the problems are more widely. Here at UNCITRAL, we need to think how we can improve legislation in different states in order to eliminate the consequences of COVID-19 using the current model laws of UNCITRAL and laws which we can adopt. I don't think we can resolve any economic problems here in UNCITRAL, but we can crystallize the problems and try to resolve them. I think we need to be familiar with difficulties which can stand before us in e-commerce and recognition of e-signatures. Technically, it's very difficult to find the universal key to any of e-signatures. To recognize it, we need to build a trust-friendly environment for that. And we have current UNCITRAL instruments which can be used by the states, but we think we need to adopt more instruments for states in different fields. And we can take into account current instruments and laws in different states, and especially in Asian Pacific region. As you know, it was adopted the Convention of Paperless Trade in Asia Pacific region in 2016. So it's a very good instrument for states to look through this convention and to build a platform for recognition of e-signatures. Here in Russia, we have adopted several laws during the pandemic of COVID-19, and we set a lot of rules providing assistance to entities and to small and medium-sized businesses, and we are ready to share with our experience with other states. Thank you.
Thank you to the distinguished delegate of Russia. I don't have any more requests for states interventions, so maybe I don't know if any panelist wants to comment about it was just said by the representatives of some states. I don't know if anyone wants to make any comment. If not, then I will pass the floor to Luca to again to if he might answer the questions we are just receiving from the public. Please, you have the floor.
Thank you very much, Chair, and thanks to all those who have submitted questions. But before that, of course, thanks to the distinguished delegates of the states for making their statements. Now, we have a number of questions here. I would say maybe we can start by focusing on specific questions first and then get to the more general ones. I have seen a specific question, for instance, on what are the challenges for developing countries in doing KYC electronically. Now, this is an issue that came up time and again. I wonder whether there is some of our speakers who would like to take up on that one. Maybe because it's also a payment issue, maybe Jan, you could say a little bit more on this?
Yeah, sure. I'm happy to. Thank you, Luca. I think with respect to the KYC matters in developing countries, I think I kind of mentioned that from the legal perspective, I think a lot of the countries in their the laws related to money laundering and sanctions, and often when they talk about KYC, they only focusing on the original documents. They don't really accept the documents that's in electronic format. I think that's the common theme we have been seeing. I think that's definitely something that needs to be addressed from the legal perspective. And in terms of from the operational perspective, I think a lot of challenges is really about having a identification system that's widely accessible by by the larger population. I think when we think about all the countries that have been very successful in terms of fintech, it's either India, China, or Brazil, and they all have a very successful identification program in the sense that, a very large percentage of the population have formal identification. And then I think the second thing is that once you have an identification system, the important thing is to really allow the system to be able to deploy it digitally. So both those three countries actually have done a lot of things to enable the digitization of the identification. I think especially in the case of India, in the past 10 years, they built up the Aadhaar system, which allows people to use biometric information to identify themselves. And they also have done quite a lot of work to outreach to the rural areas in order to promote the financial inclusion. And then the third thing I kind of want to focus for the developing countries is that because in order to do promote the financial inclusion, it's very important to have a tiered KYC. So what does the tiered KYC mean? It basically means that for small amount of transactions or for the infrequent transactions, if we can allow people who don't have sufficient identification to conduct those transactions, I think it's very helpful to include them in the process. And given that making payments and also receiving payments, it's so important for the people with low income. And then gradually, once you have this more national identification system built up, and then you can allow more people to be included in the process. So I think those are the three things that I want to highlight for the challenges in developing countries with respect to KYC. Thank you.
Thank you so much, Jan. I don't know if any other speaker wants to take the floor on this issue. This was a very comprehensive reply. If not, maybe we can take another question. We are getting some questions that are very specific and very appealing. For instance, one question that I love to receive, but I cannot pass on to the speakers. Maybe I should pass it on to our chair. Is there any consideration of taking the work done on the UNCITRAL Model Law and international trade transfers further in the context of digital transfers and payments? That is really up to the Commission to decide if there will be a formal proposal, if there will be further interest, if there will be maybe some exploratory work, then eventually it will be possible. This is something that is very much in the future. But I would like to take this opportunity to remind that already significant work has been carried out in the field of the digital economy in general, and the reports are available on the UNCITRAL website, the 6 official languages, and span over a number of issues, including tokenization of assets, which are very, very close to the issues that we are discussing with digital currencies. So we have to have a holistic and comprehensive view and see that all of these new challenges, they are complementary. Now, I have a very interesting question on specific issues of landlocked countries. If the landlocked countries have faced specific issues in supply chain management from the COVID-19 pandemic, or maybe they have been particularly affected or else by the pandemic. Now, landlocked countries, of course, are a very important category of countries in the United Nations, and we wanted to give a special attention to their needs. I don't know, maybe Shantanu, do you have some information on this, maybe from the business perspective, or of course, or Emmanuel, or Raul, of course, anything about, in particular, for landlocked countries?
I can jump in. I don't know whether Shantanu wants to say a few words as well. On that, the indications that we have from our member states is that indeed landlocked countries have been particularly affected by the current crisis. If you go back to some of the charts that I showed during my presentation, the fact that there were very few commercial flights, that there were very few cargos, containers, container ships, this had an impact on trade in general, but made it even more difficult for the landlocked countries. This is very informal feedback that we got. We don't have specific figures, unfortunately, to back it up. So it's more informal information that that has been flagged in the context of discussions at the WTO. Thanks.
Thanks, Emmanuel. Shantanu, do you want to add something? Or Raul, any view from the ICC?
Maybe if I can just add, there will be a note that will be published on the WTO website very, very soon in the coming days, I believe, on the impact of the current crisis on trade costs. And there are a couple of charts in that note that show, for example, blockages of trucks at the border, especially in Europe, but this is applicable also to other regions, and the impact that the current crisis has had on trade costs, which of course impacts landlocked countries most significantly. So, I would invite those participants who are invited, who are interested in this issue, to have a look at the WTO website, the COVID page. That note should be published very, very shortly, and I would probably give you more detailed information and numbers that I can give you orally, just like this.
Thank you so much, Emmanuel. In the building on the issue of the documentation much available, is another question of general interest on an issue that has already been raised yesterday. The question is as follows. One of the key challenges is the underestimation of training and the need to enhance awareness and knowledge in trade finance. It's maybe more of a comment, but I would like to hear from you what is already available, because sometimes it's also a matter of information sharing. So the comment he says a lot of stakeholders, often with this decision-making power, has the possibility to make decisions, but actually they do not realize that those decisions need to be implemented with adequate training, adequate capacity building, so that in the end, this trade financing business is not to the full potential. What is available out there already? What can we recommend to our active audience? Where to start to build up this capacity? Raul, I think it should be the first one to tell us something.
Thank you, Luca. Yes, I was about to jump in. So ICC actually offers a range of ranging from free to low-cost courses and certifications on trade finance through our ICC Academy in Singapore. I'll put a link in the chat, but we do offer lots of capacity building and training elements on trade finance there. Thank you.
Thank you, Raul. Our views on these, Jan, I think you have many resources also on trade financing in the World Economic Forum, especially at your Center for the Fourth Industrial Revolution.
Yes, I think we have been discussing with a lot of companies who are trying to leverage the blockchain technology in order to promote the trade financing. I think that's still a work in progress.
And we'll watch that space. So thank you. As we have had some benevolent attitude from the God of technology today, maybe because of the topic, we are now transitioning towards the end of this session. And I would like to invite my colleague, Angelo Faria, to give some concluding remarks.
Thank you very much, Luca, Chairman, Madam Secretary, distinguished delegates, ladies and gentlemen. We are happy to be in a panel discussing the impact of COVID on electronic transactions and the impact of the possible model laws of UNCITRAL, the possible impact on addressing some of these issues in a setting that allows us to discuss properly, opposite to the technical difficulties we had yesterday. So I'm very happy that we're able to have a more conducive discussion. Mr. Chairman, ladies and gentlemen, as I was listening to these presentations, which I think everybody would agree with me, are all excellent. And also in looking at this from different angles, one could also see there's a thread in this discussion that in a way not only highlights the key issues on this panel, but in a way also relates us to the broader context of the various panels that they're discussing. We discussed yesterday IDM, identity management, and this issue came across again very strongly here, that the need for having a proper framework for identity recognition, identity management, cross-border recognition, interoperable systems for identity management, also to enhance trust in supply chains, but also in other transactions. And let us allow me to begin by something that Shantanu was mentioning, which also has other implications with respect to UNCITRAL. He was drawing our attention to the enormous challenge faced by an industry that all of a sudden had to expand supply chains and to reach out, to tap out to new participants and new suppliers with whom they had no dealings before in order to meet an immediate increased demand, or in order to shift from an established supply chain to a regionalized supply chain. And in that, they had then to electronically deal with people they had not been dealing with before. And that makes a very strong case for having a proper legislative framework for trusted service, for electronic signatures, or for ID management. Now, this is not by itself a new situation or a new reality. The UNCITRAL Model on Electronic Signature was adopted in 2001. How many countries have adopted workable laws on electronic signatures so far? And this is something that Emmanuel was mentioning before. We're far from being at the level of universal legal acceptance of electronic means of signature authentication as we should have been. Now, more broadly speaking, if you relate to the model law on electronic commerce, we're now at about 70 countries and more than 100 jurisdictions that have implemented that model law worldwide. That is significant, but we still are missing about 100 countries that have not done so. And some of them have not so, and the arguments are still the same. We hear also still from lawyers in some countries saying, we don't need to have a model law because we have all these legal opinions and cases that signify that there is no problem. But in a situation such as the one we are addressing today, in the situation as the one described by all the speakers, where payments are being blocked because an industry is still using paper documents, we cannot rely on 20, 30, 50-page long legal opinions in order to give confidence for parties that can use electronic documents. So legislative action is really called for and really has become urgent. And our, exposure to disruptive situations such as the pandemic makes the strongest possible case for action. Now, the issue is known, but I think now the industry is making fairly clear that we cannot wait any longer for solutions for that. Now, a particular emphasis today was paid on transport documents, as they are the basis for the issuance of documentary credits, but also other documents and payment systems. Here, I'd also like to mention the relationship between that and a possible future work by UNCITRAL, not only more broadly in the area of digital economy, they'll also be looking at digital assets. There are speakers today, and especially Yan Chao, but others mentioning the value of cryptocurrencies, but also other payment mechanisms that are developed in distributed ledger, using distributed ledger technology through blockchain and other means to support international payments. And this is something that is part of the work program that we're presenting to the Commission as a so-called third generation of issues on electronic commerce, where we should have been by now beyond the question of legal validity and recognition of electronic records. And unfortunately, we are not there yet. And I think all the speakers made that point very clear, that we should have been, we're not there yet. At the same time, I've been already faced with a new generation of issues for which still many countries don't have a legal answer. And cryptocurrencies and electronic payments and digital assets more generally are a very clear example of that. I remember, Mr. Chairman, years ago, reading a report by IATA on the cost of paper only in the aviation industry, and IATA at that time estimated that the cost of processing one paper airway bill is about $30. $30 for one airway bill. Now, millions of airway bills are issued every day. Now, and the airway bill is for trade, not the most significant paper document. The most significant, as you know, is the ocean bill of lading. And the ocean bill of lading is still being issued, apart from the North Sea trade, still being issued around the world, and still being the required document for documentary credit. That, if you think again of the metaphor, the illustration given by Emmanuel, that means 25 centimeters high of paper that are required for one single transaction. Years ago, also UNCTAD and ESCAP had estimated that the cost, that the savings with reducing paper, only the Asia-Pacific region would be in between 25 and 44% of the cost of transactions, simply by reducing paper, the cost of financing transactions. So that is quite significant. And I think all the speakers were quite persuasive, Mr. Chairman, in making the case that we cannot wait any longer for that. Now, there are also other comments that are made today that also shed a light also on the rationale for the way we structured this panels, Mr. Chairman. We also heard a plea by Raul and on behalf of the ICC, save our MSMEs. They are the most exposed companies to this. And we'll have two panels next week that would be addressing specifically the exposure of SMEs to insolvency during COVID and the consequence of that, but also what can be done to facilitate credit access by MSMEs. They are particularly exposed in many countries because of the lack of a proper framework for pledging collateral, physical collateral to obtain credit. They cannot benefit from balance sheet credit in many countries, and so they're particularly severely affected by this crisis. But another panel next week will be discussing procurement and public-private partnerships. We heard calls, Mr. Chairman, also today for infrastructure and expanding infrastructure for payments, expanding infrastructure for the electronic communication of documents. At the same time, we heard also from Yan Chao that half of the world population has no access to internet. Now, Mr. Chairman, I think also this panel made it very clear to us how crucially important it is to expand this infrastructure. And in doing so, of course, there is this enormous role for the private sector, but also a role for the public sector, which would also be done by procurement for expanding the bandwidth capacity of internet service to support these technologies, and the need for proper rules of procurement also in an urgency situation such as this. This will be addressed on a panel next Tuesday, but also on public-private partnerships to expand that. So we're glad to see that the broad spectrum of the presentations we had today, Mr. Chairman, also allowed to place this particular topic within the broader context of the work of UNCITRAL. And in particular, of course, Mr. Chairman, we are grateful to them for stressing how foresighted the Commission was in adopting its electronic commerce instruments, beginning with the model law in '86, the model law on signatures, the model law on electronic transferable records, and now currently the work on IDM, and possibly was the expanded work on digital agenda that we'll be developing. So this, Mr. Chairman, I think are the most significant takeaways that I think we have learned from the presentations today. And I thank you for allowing me to draw these conclusions.
Thank you, Mr. Estrella, for your final remarks. And well, we come to an end. I would like to thank again to all, especially to our panelists and to all of you for your participation at today's panel. Before closing, I would like to remind you that on Monday, we will discuss assisting economy recovery, targeting MSMEs. It will be at the same time at 1 o'clock in the afternoon here in Vienna. So I hope to see you all again on Monday. Have a nice weekend and stay safe. Bye-bye.